Lori Heinel, welcome. Thank you so much for joining us here at Empower 2024. We're hearing a lot at this event about the state of the markets. What would you say are the most important factors driving markets today in your view?
Well, there are several things that we're keeping a close eye on. First and foremost is the global recovery sustainable? And are we actually going to see a kind of bottoming out in growth and then the next leg up? And very closely related to that is, what do central bankers do? Our view is that they've retained tight monetary policy, perhaps a bit too long. Certainly in the US, the Fed remains very hawkish, and that potentially creates risks for that nascent global recovery. So those are the two forces that we're really focused on.
Let's talk a bit more about that divergence in central bank policy. What would you say is the key influence it's having on the markets, and what are you seeing and what should we be looking out for?
Well, there are several implications for the divergence in policy. First and foremost is the question of where you can get yield around the world. So the US remains a bit of an attractive market, in part because yields are higher there. The other side of that is that continues to fuel dollar strength, which is something that ultimately may become destabilizing, but in the short term, it makes US assets relatively attractive. But ultimately, the real question is going to be, can the economic recovery sustain against a backdrop where you still do have tight monetary policy in most places around the world?
Talking about the global picture there, how would you say that is playing into the equity market, and how concerning for you is market concentration, and what happens if, say, something like the big tech phenomenon starts to sort of change and waver?
Look, market concentration is ultimately a real challenge because it means that the indexes keep plumbing higher highs, and yet there's not really breadth in the market. So we've been looking for a while to see a bit more of that broadening out as corporate earnings continue to come in relatively strong, and you start to get more confirmation of an economic sustainability. So we are quite concerned about concentration risk, both because of what it signals to investors about what valuations are versus what the broader market looks like, but also because of that concern that if rates do stay high, you get discounting, and that ultimately can lead to a pretty dramatic pullback.
So with all of that in mind, the big picture you've painted there, what would you say are your key strategies when it comes to managing that risk, if you like? Because we've got more ahead, haven't we? We've got big elections all around the world, particularly as the US ahead. So what would you say are your coping mechanisms, if you like?
Well, there are several things. First and foremost is we've been surprised at how low volatility has remained against both the political dynamic that you just referenced, but also this pivot point that we do see in monetary policy. So one of the things we are looking for are diversifiers in the event that markets do correct. So that puts you into things like gold potentially as a diversifying asset class. We're also spreading our bets. So even though we are overweight equities, shockingly, considering where we are in the cycle, we've been broadly diversifying that bet to not be too concentrated in any one market.
And also, perhaps if you're talking about any sort of disruption geopolitically there, we can't not talk about AI and how that's going to have an impact both on this industry, but also on all those things we invest in. So what are you looking at there?
Well, look, AI is a thing. We actually believe it is real. It's going to dramatically change operating models. It's going to dramatically change value propositions for companies. And so at the end of the day, it's a fundamental analysis question. What are the companies that are actually embracing AI technologies? How are they leveraging those to make their operations more smooth or to be innovative? And so we think that that's the way you need to play AI, is to look at those companies that are going to actually benefit and become market leaders because of it.
Just finally, there's more than 500 asset and wealth managers here at Empower. What key conversations are you looking forward to having, and what do you hope to take away from the event?
Well, first and foremost, a lot of the things we've been talking about. So what are others' views on what the trajectory is of central bank policy? Also AI. Again, it's always interesting to hear different perspectives on that and how you play that particular theme. And then I think also there's this kind of enthusiasm that people have generally that maybe we actually have gotten to their side of economic recovery. But with that political backdrop that we talked about, that's a little bit dangerous in my opinion.
There's certainly very interesting times ahead, Lori. Thank you so much for sharing your insights with us.
My pleasure.